So I'm going to, as Bill said, I'm going to walk through the tax side of the donation of land or the easement. So overriding this, yes, if you donate land or an easement, you're foregoing selling it for proceeds of cash, but what we're hoping to show you here is the significant tax savings that's derived from doing that, and you get to retain the use and enjoyment of the land around you, and importantly preserve it for ecological purposes. So there's a lot of intrinsic benefit to that because you don't have somebody building a whole bunch of property around you. So an ecological gift is a gift of land or a donation of land, including a covenant or easement. The fair market value, as Bill mentioned, is determined by appraisers and certified by the Ministry of the Environment. It's not something we do, we're not appraisers, but you would work with Bill to get the appraisal on the value of the land. So the tax credit that we were referring to earlier is related directly to the assessment of the fair market value, so you get the donation credit for that amount. The unrealized capital gain on the property, so the amount that it's grown in value since you acquired the property, gets wiped out as a result of the tax rules related to these types of gifts. The donation can be carried forward 10 years if you don't need it in the year that you do the transaction. You could have another completely separate transaction or other income that you could use the donation against, but if you don't need it, it will carry forward for 10 years. And it's not subject to the normal 75% income limitation that other donations would be subject to. So in the first example, we're comparing selling a property for $1 million versus donating it for the donation amount of $1 million. And we've used throughout the examples a cost base of $150,000. We've mentioned that the principal residence exemption doesn't apply. And by the way, if it was vacant land, it wouldn't apply anyway. So you can only use principal residence exemption if you're actually selling a dwelling. And we're using 2017 tax rates as they currently stand because the budget hasn't come out yet and we don't know what's coming. So we've got a potential capital gain on this property of $900,000. The proceeds were $1 million. So that would be included in income at half of the actual gain. So $450,000 would be your taxable income. You would pay tax at approximately $238,000. And what we're doing here is we're comparing the total tax that you pay, on the gain. Plus, we're also going to assume for the purposes of these scenarios that the individual would make $150,000 a year for the next 11 years as employment income. So they would have tax on employment income plus tax on the gain for total tax of $763,000. So after tax, they've retained $1.886 million. And that's the proceeds of the sale plus your employment income less the taxes on the gain and the employment income. So instead, if the property was donated, you get a tax receipt for $1 million. The $900,000 gain would be reduced to nil according to the tax rules. So we're still assuming the same level of employment income, so none of this data has changed. But the net tax, none of the tax on the employment income has changed. What I should say is, what does change here is that you get to use the donation credit against all that employment income over the next 10 years. So this $36,000 is the total tax that you would end up paying on all of that income over the next 10 years. So significant savings. And we've got a slide at the end that will compare the amounts as well. So in this situation where there's an easement, again, the property's worth $100,000. The value of the easement, because you're not giving up the entire thing, so if you think back to the picture that Bill showed you with the small part that you retain, you give the rest of it up. You're giving up 85%, so your donation amount would be $850,000. The other data is the same. So again, if you sold the property, this is like the first slide with all the numbers on it. You retained $1.886 million. After you sell the property, you pay taxes, and you've got your employment income that you pay taxes on. Now, if we compare that to giving away the easement, and don't forget you still have the use and enjoyment of the land, you've got a donation credit for $850,000. The gain is, there's no gain for tax purposes because of the rules in the Income Tax Act. But you can use this $850,000 donation credit to significantly reduce the taxes on your other types of income, whether it's employment income, investment income, or something like that. So your total tax payable is only $103,000 in this scenario. So you've saved some tax on your other income. You can also do a partial sale and a partial easement. So the property has a total value of $1 million, but if you did subdivide the land, in this scenario, you've got a parcel worth $600,000 and a parcel worth $400,000. If you give an easement on parcel B that's determined to be $340,000, we're going to just illustrate the tax savings from this type of scenario. So if you sold that chunk of land that's worth $400,000, you'd have a $360,000 gain. So they do a portion of the original cost based on the percentage that you've sold. You'd have a taxable gain of $180,000 and pay tax of $93,000. Again, you've got tax on your employment income, a total tax payable of almost $619,000. On the other hand, if you gave an easement on that $400,000 piece of land, you'd have, there technically is a gain of $360,000 that's wiped out. You won't pay tax on that, and you've got a donation credit of $340,000 that you can utilize against your other income. So where you were paying $619,000 of total tax in the last slide, now you're only paying $328,000 of total tax. So it's significant savings. So this is a summary, and I realize it's maybe hard to see these numbers, but we're just looking at the total savings due to the donation. In the first scenario, we were comparing a total sale versus a total donation. The savings is $727,000. So even though you've technically given up $1 million in proceeds, you've saved a significant amount of tax and preserved the land for conservation purposes, and you don't have somebody building a big monstrosity beside you or developing land and ruining it for future use. In the second scenario, we compared an easement to selling it, and you saved $660,000. So you've got tax savings that mitigates the fact that you have given up some proceeds. And in the third scenario, where you subdivided the land and you sold some of it versus donating an easement, savings is $290,000. So this is showing the after-tax cash that is, I guess, foregone as a result of making a donation versus selling it outright. We technically foregoing $272,000, but you retain the land for conservation purposes. If you paid the easement, you end up foregoing $339,000 in a partial sale versus partial easement. Giving up $110,000. The donation credit can be used if you, let's say you wanted to give an easement or do a donation, and then you maybe wanted to transfer the remaining property down to the next generation. That transfer is taxable, so you can use the donation credit to also reduce the tax on a transfer to the next generation as well, as long as you do it within the same 10-year period. Any questions?